There's a window of opportunity open now for buyers and sellers to make a great strategic move in the real estate space. Roman here with you, your San Antonio, Texas real estate advisor. When you're buying, selling, investing, relocating, you need the right advice. You need to make the right moves. You need the best representation in the real estate market. Gold Real Estate Group, Roman, I am here to serve you. Today, we have exciting news. Mortgage rates are coming down second week in a row. I'll be also breaking down the relationship, historic relationship between mortgage rates and housing prices. How do those translate? When one goes down, other one goes up or down. What does that look like? When we have an understanding of what happened in history past, we can also have a pretty good understanding of what's going to happen in the future. Stick with me till the end. You will not regret it. A lot of good information and insight for you. Thank you again for joining me. Like, subscribe, share this video if you found any use in it. Thank you again. It is a beautiful day today in the great state of Texas, December 18, 2023. I am delivering some great news. Mortgage rates fall again, second week in a row by another quarter point, which that translates into big savings for those who are buying a house, those who are selling and downsizing, selling and upsizing. Maybe your family grew, you need an extra room, you need more place, in the kitchen, more space, more cabinet space, right? Maybe the kids left the house, they got married, you need to downsize your retirement home. So people have been on the sidelines looking at the mortgage market saying 8% is too much, 7.5% is too much. And now finally we have actually broken below 7, and people have jumped on this opportunity. I'm telling you, as these interest rates have declined, this has been seen as this opportunity by millions. One thing I want to tell you is that there is so many people right now who are watching this mortgage interest rate market, and there's almost like a threshold. Once you get below that 6, that's what my personal opinion is. Once that rate falls below 6 into the 5s, I believe the floodgates will open, and we're going to see a repeat of 2021 market, where it's just going to be a wild place, wild west of the real estate, where people are just going to be doing crazy things like overpaying by 100,000, waiving inspections, appraisals. But now is the time for those savvy buyers, savvy investors to make a move in the real estate space, because this window of opportunity, I want to tell you, right now, from late December to, I would say, the beginning of February, is this window of opportunity where it's still the slow season. Spring hasn't begun, right? School is not close to being over, and people are still kind of getting through the holiday season, the beginning of the year. They're busy. And so now is the time where you could take advantage of the slower season, negotiate a deal, sell your house, buy the new house. There's programs that are actually out there. And this could be such a strategic move for some of you, where the program offers to give you cash for the house that you have without you selling it. So it's a buy before you sell program. You can go buy your new house, and then you have 6 months to sell the house without paying 2 mortgage payments. So this is such a strategic move, because you can buy in the slow season and then sell the house in the hot season. In this way, you could have an upside in your equity. So that's just something to think about. If you have any questions, about strategic moves to make in the real estate space, all my information is below. Reach out to me. Let's get into this article. So what is going on? We have seen a decrease in the mortgage space for second week in a row. The central bank held firm at its December meeting and pointed to rate cuts in 2024. They are predicting that 2024 is going to be a year of no more rate hikes, no more going up, but now it is coming down. Mike Fratatani, chief economist at Mortgage Banker Association, this is what he says. It's all about the pace of the cuts from here. So he's saying, how fast are they going to cut? How often are they going to cut? And for those people who are looking into the real estate market and asking the question, is now the right time to move? You have to understand that each time that the market, the mortgage market comes down, meaning that the interest rate on a 30-year fixed mortgage comes down, the prices begin to move up. The real estate market begins to heat up because more competition, more buyers enter into the market. Housing becomes more affordable, right? It becomes accessible to a lot more people, and this creates a environment of competition which causes the market to move up. Let's look at what you are saving with this 0.25%, 27 basis points decrease in the mortgage in the 30-year fixed. How much are you saving? At the current average rate, you will pay a principal and interest of $677.43 on every 100,000. That's down $18.36 from what it was last week. So if you are getting a mortgage today, on every 100,000 you're borrowing, you're saving $18.36. And so if you're talking about $1 million house, that's going to be, close to $200 savings on a monthly payment. At the life cycle of the loan, that could be a lot of savings. This is the great question, right? A lot of people are thinking about this. What is more important? Is the purchase price more important or the mortgage rate more important? And this is where you have to become logical and you have to get out of your emotions. You have to begin to ask the question, could you get a good deal on the purchase price? Meaning, could you negotiate the purchase price down and at the same time get the best mortgage rates? Because we understand that there's a relationship. When the mortgage rates are good, the prices are going up, meaning that the prices are bad. And so what is better for the consumer, for the buyer? Is it better to shop when the higher rate drives down the competition and you're able to lock down a lower purchase price and lock that in forever? Or is it better to compete against another 10 to 15 buyers with a lower interest rate and overpay? And the conclusion is, for the buyer, for the consumer, for me as an investor, it is more important to lock down a lower purchase price because the purchase price is with you forever. But the mortgage rate, you could always swap out. You can always refinance the mortgage rate. And so, something to take in consideration while we are still in the slow season, all the people are still on the sidelines. Now is the time for you to get in, to negotiate, and to lock in that low purchase price that you're going to keep for the rest of your loan until you pay it off. And so, because of the good results in the war against inflation, now the rates of the mortgages are coming down. This is great news for buyers and sellers. This is great news for inventory. Another very important and interesting data point is doing a little bit of research on the subject. How closely related are historical mortgage rates and housing prices? A lot of the time, there's this understanding that prices are going to come down when the mortgage rates go up. People think, well, let's wait for the rates to go up so high that it's going to crash the housing market. The market's going to fall 15, 20%. and then the rates will come down, and then we will buy. So it's this game of perfectly timing the market. And, it might work for some people. Some people might be lucky. It's almost like this gamble, but some people will not. It'll be just a huge waste of time. So it really depends on the need of the person. How severe is your need for housing? If it's something that is, high on the scale of a necessity, I would say timing the market might not be the best bet for you. But very interesting is this study reveals that higher mortgage rates does not always mean lower prices. And so, what they did to compare the trends in historical mortgage rates and housing prices over time, we calculated a year over year percentage change. We used monthly data spanning from January 1992 in June 2022. Here's the summary. This is a data set of 30 years of history. And here is the number of months where a certain scenario played out, and this would be very interesting. Mortgage rates are declining and house prices are growing. So, out of all of that time from 1992 to 2022, while mortgage rates were declining, coming down, and so that is what expected for 2024 is that the mortgage rates will decline, house prices will grow. Let's play out the next scenario. Mortgage rates grow, house prices grow. And so this kind of debunks that whole, understanding that as the rates grow that the prices fall, because this scenario played out 117 months. Out of the 30-year span, 117 months, mortgage rates were coming up, and at the same time, housing was going up. So if we're waiting and we're saying how high is the probability that if these rates continue to go up, that the prices will come down, the probability is not that high. And we're going to see it here. Mortgage rates decline, house prices decline. 49 months where the mortgage rates were coming down and the prices were coming down. And then finally, this is the scenario that people are waiting for. Mortgage rates grow, house price decline. So this is the scenario. 6 months out of those 30 years, only half a year, that scenario played out. This means this is a very low probability that this would happen. I would not bet my family's future. I would not bet my life on this probability to happen, because out of all of those 30 years, only 6 months this played out. And there was tons of other factors involved in that, other economic factors. We had that financial collapse of 2008 was all tied to bad mortgages, subprime mortgages. And so that is different. It is a lot more challenging to get a loan on a house. So I don't foresee that happening. This chart is very interesting. Changes in mortgage rates and house prices over time. These circles here, so historically, there's been 4 times where the increase of mortgage rates have caused a slowing down of the growth. Since 1992, there has been 4 instances when mortgage rates rose over 20% year over year for more than 2 months in a row. Each of them have been accompanied by a deceleration in the house price growth.